weekend all. Ira Epstein of Linn and Associates with your SPDR ETF wrap-up for the weekend, and this is of July 31st, 2020. All right. This edition that we do on the weekend is an abbreviated one of what I do in much more detail for my paid subscribers now on weekends. A lot of you have asked me, can I give you longer-term trade ideas rather than the daily? And the answer is yes. I go then and I do, right now I'm covering 35, 36 SPDR ETFs, and I do them on a weekly basis for the paid subscribers with more studies than you see here and very specific buy-sell recommendations. But this is your entry level, let's call it that, to tell you what's going on. As you can see, I cover a whole array of different markets. I'm not really covering PODX much on the charts. I could bring it in, but it's not been one of these plays that has done real well. I think it got flooded. I have a friend in Illinois, my neighbor actually, and he's built the largest factories that make that grow the plants here and on the East Coast, amongst the largest. And he takes a percentage of each thing that he builds, and you would think he's doing well. No, it hasn't made him the money you can even imagine that he thought he would make. He was also a character. He's one of these that ran and bought rows of computers for Bitcoin. I told him not to do it. He ran to China and bought all this. Thank God he got out nicely, but you talk about, he's somebody interesting. Metal market's still up pretty good for the week. Today we had a mixed bag in stock indices. TikTok, that was the news of the day. A takeover or a buyout bid, I guess you could say, from Microsoft to them. I was surprised it was Microsoft because I don't know why they would go into it. I've been trying to figure that one out. I see Microsoft as an enterprise, in other words, for businesses. Yeah, they're for you and me, individuals, but they're really not chat rooms and that. Yet here they are. I would have thought Google, Facebook, I could make arguments as who would be there. I could also make arguments on those other companies that the government, the US government might say, oh, look at, you're becoming a monopoly in that, blah, blah. Imagine somebody knew they were going to do this as these House hearings went on this week. That's the interesting part. So as we look at this doesn't look like a chart that's ready to turn around. It could at any time, but boy, this is just since March. This is a weekly bar chart of XLK, been on a tear to the upside. There are very few weeks you've had lower weeks. You've had a fair share, but not a great amount. When you get them, what sets up are the swing line lows. And we have a pattern here of higher lows, higher highs. That's a bullish pattern. To break it right now, when you're just looking at a weekly chart, you wouldn't want to see the market under 131. When I look at the 18-week average, this is support if the market were to break, but you'd have to break the trend in the market to get to it. You'd have to break the 131. Now what's going to happen is Monday morning when the market reopens, this data, one of these low numbers back here is going to be thrown out. Remember, an 18-week moving average is going to count back 18 and drop that 18th and replace it with the first ticks that come in on Monday morning. So this number is going to lift itself. Will it get to the 100 levels? What I'd like to see, and that's what I'll be looking at. Let's assume, forget that, and the market just keeps moving forward. 114.70 is the upper Bollinger Band next resistance point. You had been hitting that on a regular basis prior to the March break. Since the March break, not once have you been able on a weekly basis to get up there. That's a warning sign that as strong as the market is, it doesn't want to get ahead of itself. Getting ahead comes when you keep hitting the number, and it typically comes out of sideways action. You don't have that sideways action. This is launch control. It's like prices went to Mars this week. Remember? We sent up that beautiful craft. All right, now when we take a look at momentum, momentum on a weekly chart, the way that I teach it, is either pointing up, down, or sideways. I don't look for overbought or oversold or embedded readings. That's the three ways. I've tried them and I find that they confuse you, if anything. Some will say, well, look at momentum turned back here just before price. And I see it. I'm not blind. I certainly can see that that's the case. But I also can say, now the momentum turned down just as easily. And that's what I do. I find that the weekly chart isn't as telltale on momentum as the daily chart. The daily chart, I love this study. Maybe MACD or one of the other studies does better for the weeklies. For the industrial sector, the trend is up, but you're in layers of resistance. Take a look right here. You had gotten up to these numbers, fought a battle, couldn't go beyond it, fell back to regroup, I think you'd agree, then started coming up. And now the resistance is the 200, and it should be the 100 if it can get there. Then the upper Bollinger Band. The trend has been up this whole way through, even with the correction. You've got the higher lows, the higher highs. You don't want to take out the 65, 63. The next target is 73.80. That's the way that I'm viewing the chart, momentum pointing up. In the energy sector, I am not friendly. This market has got a pattern of lower highs. And if we look, now the question is, what about lower and lows? So you have to go all the way back here. And the low right here on a close is, and this is, well, let's first take the low, 34.30. The close was 35.99. So 35.30, keep in the back of your mind. You took it out right here. That's why you always want to know what that is. Therefore, I think the pros are going short right here, right now, right against the 18-day average with a very tight stop of 38.55. They got their fingers crossed. Can the market make it back to wherever the lower Bollinger Band comes in? That number's moving at about, if you look at it, in the neighborhood of about $1.50 a week. So that will jump up maybe towards $32. I'm just giving you a guess, but that's what I'm looking at. QQQ hasn't backed off at all on the weekly chart. Daily charts got ugly for a while. Correction. And you saw that in the price over the past 2.5 weeks or so as the market fit in here. But as it's turning out, we still have the higher lows, higher highs, momentum up. If anything, momentum, which was starting to turn down, strengthened again. Take out 251.32. 251.32, and I'd get very nervous. I would think the market's then going to make a run wherever that 18-day average is to get back to it, and probably be an area to step out of the longs. In the EFA, the emerging markets, well, this is an outside week down, not unexpected. Let's back off the chart. We, prior to this, had run up to the 100-week and the 200-week average. Market then pulled back, and in the process, it rebuilt and kept the formula of higher lows, but it had lower highs. It took this week, when we got up to 62.89, clearing 62.61 to say, I'm back in an uptrend. Now you don't want to take out 60.44. Forget me. What would you be thinking the resistance points are? So if you look at it, well, the 100-week and the 200-week were acting as resistance before. Why aren't they going to be there now if the market rallies? Market comes up, and this is the week of the 17th. Okay, that's where I think the smart pros took a bit of money off the table. They don't know if it's going to back off from there like it did here or not. You just don't know. But they'll keep a tight stop and see if it can go a bit higher. And it didn't. It didn't make it the rest of the way. I think they're out. I think if you get over this week's high, you get them back in. But they're going to be worried. I think they're going to be worried. Are you going to make a run to 60.44? And I'm not bearish. You're over, by the way, the 18-week average. One of my breakers in my brain, and what I do is, when a market is over the 18-week average, I'm looking to be a buyer. The bias is up. It's a filter on my other work. It's not matching it. GLD, breakaway to the upside, right? Okay. Do you buy over Bollinger Bands? Not this character. You could. I don't. Why? Because only 5% of the time do you stay over them. It's like a house bet. What's going to happen is you stay over it. That doesn't mean you're not going higher. You might have a better entry spot. Think of it that way. I'll leave it up to you, but it's certainly bullish there. It's bullish in the gold miners, not on the daily charts. They are certainly not in the bull camp. I've already put out my Spider ETF video for the afternoon paid subscribers, and I explain all that to them. This is a key resistance zone. You finished 42.94, you got through the upper band, and you hung right there. You hit an upside target. That's where money comes off a table. TLT, I've been saying, this week, if you saw what the Fed was talking about, my interpretation, maybe I'm wrong, I felt that they were going to start targeting some of the 10-year, 20, 30-year money that's out there. And I think the market's agreeing with me. That's why you're going higher on this chart. When I say targeting, I don't think the Fed wants to do yield controls. I think they'd rather try to figure out if they can control the market to a degree with the help of the marketplace. The marketplace at the end of the day is huge, you know that. But the Fed's bigger. And because they don't have a balance sheet to worry about, they can just do whatever they want. But if they're doing that, then yields are falling. And that talk that by the end of the year we might have 1% rate, you could, but between now and then and what we know now, no. The 10-year note today, all-time low yield close, 0.533%. For 10 years, buy one, that's what you're going to get before your expenses. All right, still up. Foreign currency, I think the move is on against the dollar around the world. And does the market get ahead of itself at times? It certainly does. But these are breakouts to the upside right here, and they look rather strong. And in jets, I'm still looking. I hate the airlines right here and still coming down. I happen to be with Warren Buffett. People will say, oh, he missed it and blah, blah. I don't think he missed anything. I think he realizes that we saw an event that's going to last years to come, and the marketplace is saying that to you. Think of what this is doing and how that market is coming down. Now, I cover this, and as I said, a lot more because on the weekends, you get from me my weekend edition of my afternoon Spider ETF video. And in it, what I do is I'm looking at fundamentals from everywhere. And in those, I'm going to give you an idea of what's coming out the next day, first in reports, be it in Europe, Asia, America. I'm going to help you, I think, on your own confidence in your trading. You might be asking yourself a question. Trading's the loneliest thing in the world. With COVID, it's even lonelier. There's nobody, you're not sitting in a trading room doing anything, but you want an idea. Well, that's where I want to come in. I want to fit right into that. I want to be your go-to video that you look at. And on the weekends, every other weekend a month, I want to be a webinar that you can join in and ask your questions. I'm not versed on stocks like maybe many of you, but I'm a chartist. And I'll put myself against anybody out there. And when I look at what's going on right here, I cover these and I keep adding. Like in others, I just added BETZ. So it's all going to be there. I make it simple, and I make it in a way where you can work with it. So in the afternoon, at about 4 in the afternoon, what I go out and do is I will sit there and make my video. Now, you've got from that time on, once it gets posted, all through the morning to get to it. Why do I do it that way? We both know that these spiders and ETFs, there's some aftermarket trading, but the real guts of it depends on the futures, and they're going 23 hours a day from Sunday night through Friday afternoon. So I make this affordable. Now think about it. You're a Starbucks drinker. You go in, you buy a grande, whatever, latte, whatever it might be, or the biggest drinks that they have. Who the heck knows? I'm not that much more than one drink, and you're getting 30 days worth of data. Give it a try. See if it makes sense for you. It's more than 30 days now. It's because I'm including weekends in terms of business days, it's quite a bit. www.iraepstein.com, go under the word research. All the facts are there, the questions are answered, and away you go. I'm Ira. Have a great weekend. I'll see you Monday.